Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at our VS or volume spike trade setup that we have in our MTPredictor tools. But first we have to look at our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept, that losses can and will and do unfold. This is true for any approach you take to the markets. There always will be losing trades. Right, let's have a look at a good example of this VS setup in MTPredictor that unfolded on Friday, which was the 15th of March, on a 3-minute chart of the YM. For this video, I'm using our add-ons for our add-ons for NinjaTrader 8, but we have the same setups in our add-ons for NinjaTrader 7 as well as our standalone version MTPredictor 8. So it's this VS setup here, and as you can see, that nailed the very bar of the low of the day very nicely on the 3-minute chart on Friday. So what is a VS setup? Well, a VS setup is where, if I scroll back a bit, a VS setup is where we have a market making a wide range bar. You can see this bar here made a wide range bar and it moved through an important psychological high or low. This is the important point here, is that you can see from the previous day there was pretty obvious a major low in around this level. So this bar pushed down through this level, made a wide range bar through this level on high volume. You can see there's our volume has gone red on our volume indicator here. So what's so important about this? Well, if you're an amateur trader, a big move beyond an important psychological high or low, in this case the low, on high volume would normally mean a breakout, and therefore amateur traders would be going short. However, professionals have another take on this. What they do is they basically use this to fake the amateurs out. So how do we spot this? Well, we basically go to the next bar. So if I move forward one bar after the high volume bar, can you see how this bar here failed to follow through? So the previous bar here moved down below these important psychological lows here on high volume, but then the market failed to follow through. And this is the important point, is that if the high volume on the previous bar had indeed been selling as most amateur traders would have thought, then the market would have carried on down. But because it didn't and basically reversed and strength started to come in, what this actually means is the volume on the previous bar was actually buying by professionals. It was actually tricking amateurs into the wrong position. Why is this so important? Well, in any trading approach, you really want to be on the side of the professional traders, because they're the ones that make the money over the long term, not the amateurs. Amateurs tend to be the losing traders. So the professionals here are now getting long to move the market in the opposite direction. As you can see, this is what happened. The market then moved in the opposite direction very sharply, and this is a characteristic of our VS setups, is when you get a fake out like this, the professionals tend to move it in the opposite direction very quickly. So how can we spot these? Well, there's a couple of things. First and foremost, we look for our DP support and resistance zones. Remember, these are on the chart in advance. So if I place a DP from this previous low, you can see that was out there on the chart in advance. Now it came in and found some support here earlier, but there was no high volume. And if I scroll a bit further forward, can you see how our VS bar, which is this one, our high volume bar, came into our DP support zone. This is where the market then reversed. So what we're seeing is we're seeing the market making a reversal at our DP support zone. This is an area where we anticipate the professionals are going to be stepping in to make the move in the opposite direction. If I clear everything off and I actually go out to our higher time frame chart, so for you guys, if you've been using MTPredictor for a while, will know this is what we do. So I go back to before that happened, and you see the market was declining down there on Friday. Here was our last pivot low. This was the last swing into the previous high. So I'd right mouse click here. So on the higher time frame chart, this would have been higher time frame support. So this would have been the support on the 15-minute chart. So if I now scroll forward to the 3-minute chart, can you see how our VS setup also came in at higher time frame 15-minute support? This is why our MTP trend here went from red to black, because it showed you that MTPredictor showed you that the market was in an area of where the market could make a potential reversal. So I'll just take that one off. Just want to show you that that was there. So what was the result of this? Well, if I go back and now place our analysis on by right mouse click doing analysis. Remember, we use correct position sizing to vary our number of lots, contracts or shares. In this case, less than 2% risk on a sample $20,000 account, but you can set up different size accounts and different currencies if you want to as well. So our initial target would have been up here, where the profit would be in a potential 5.9. Can I say 6R? I know it's not quite, but 6R for just easy maths. So here the potential profit would have been potentially 6 times the initial risk. And this is what's important about position sizing, is when you get losing trades, and you will, the losses are kept small, so the loss would have been 1 risk unit. But if the market gets up to this level, which is, as you can see, it did a little bit later, then the profit would have been 6 times greater than the initial risk or the losses when they come through. So this was a lovely trade. But actually it was slightly better than that, because if we go back a bit, let's look at our trade management. And what we do is we look at our strength band in our MTP trend indicating. See, our MTP trend started to go blue, indicating the larger blue trend was up, but more importantly it went beyond our strength band. You see this grey band here? This is what we call our strength band. If our indicator is less than our strength band when you're in a trade and it reaches your profit target, then it looks like the market is going sideways and going nowhere, and therefore you want to be coming out at your profit target because the market is not making a big move. But if you go beyond our strength band, which you can see you did here, the market went beyond the strength band here, it indicates the market is what we call strong and is therefore going to trend further. So what we do now is, rather than looking to come out at our profit target, we use our ATR stop, which is our red and blue dots here, to trail our protective stop. So as you can see, here's our blue dots, they're holding you in here. So if I go up, go up, go up, this is where the market then crossed back through our blue dots. You can see there's our blue dots that have held you in all the way up to here. So if I grab the risk reward and I'll take it up to that level there, that's where you would have been stopped out. So in fact the trade would have been approximately 10 times the initial risk. So it would turn an initial risk of about $330 US dollars in this case into a profit of well, about 3,300, ignoring slippage and commission. This is why we like these VS trade setups, because they have the potential to move the market very sharply and strongly in the opposite direction. Like all trade setups, they're not all profitable. That's why you use the position sizing, so when we're wrong we keep the losses small. But we hope over time that we're going to have trades where the profits are large, but not just large in dollars, large in relation to the initial risks. So that's our VS setup, and it's a very nice setup because it gets you in the direction of the professional money. So just to recap, what it is a move beyond an important psychological high or low. That's important because there can be VS setups that just basically fail and snap back around minor swing highs or lows. They are not as important. The important ones are where the market moves beyond an important psychological high or low that you can see on the chart. Here, fairly obviously, this bar here moved well beyond this prior and psychological important low from the previous day, or that swing pivot low there on high volume. We then look to the next bar to see whether the market fails to follow through. If it doesn't, and more importantly if it doesn't at our DP support zone, if I just place the analysis on here, you can see that this all happened at our DP support zone from the previous pivot. So it's telling you that it's coming in at a logical area of where we're anticipating a reversal to happen. This is why we can then come in on this bar here to keep our initial risk small. We then look to our initial target. If the market's strong when it gets to that target, we then look to use our ATR stop to trail our trade and let it run as far as it can. And then over time we hope that we have profits that are large, but not just in dollar terms, large in relation to the initial risk. And if I scroll out a bit, so we can see the whole of the day, there's the whole of the day there. You can see this was an absolutely excellent trade where that VS buy setup there basically came in on the very bar of the low of the day and trailing up there. Our ATR stop wasn't right at the high, but basically took out the biggest move of the day there. And obviously I'm not going to look at any of these trade setups here later in the day because I'm only concentrating on the VS setup in this particular video. So a good example of our VS or volume spike setup that unfolded yesterday on a 3-minute chart of the YM.